tonight the main focus again will be trading psychology, and we're gonna talk about all the scenarios that we need. I hope you are seeing the maps. Hope everything is fine. Okay, perfect. Discord, there is a little bit of noise with notifications. Perfect, let's start. So, main focus of tonight again will be trading psychology and all the other topics that are covered in this mental map. So, start from the most important point. Since everybody here is into short-term trading and not long-term trading and investing or everything instead of short-term. So everybody in short-term, everybody is into day trading, scalping, not into building portfolio that will last for 10 to 20 years. We are not here to talk about strategy for long-term investing. So since everybody's here for short-term trading, let's start talking about all the rules, and I create a little trading plan based on few kind of scenarios that we need to follow to avoid fall into many problems of fear, greed, and all this kind of emotion that arrive since we open a trade. So tonight will be very pragmatic lessons. We are not talking about something mystical. We are talking about something that everybody experience. Even one time in the market, everybody experienced emotions during trading. So since we are everybody into short-term trading, we need to understand that short-term trading is a sequence of filters. And we need to remove and apply and remove every time a lot of filters, because each filters remove bad trades. So more filter we have when we open a position, more we take out the possibility to be wrong. Okay, be wrong is not something bad. Being wrong is not bad since we use the correct and proper risk management for our account. So short-term trading is a sequence of filters. Each filters remove the bad trades, and what survives, what's come out after many filters before entering in positions in the market is executable. Okay, so a little check before we start talking about illusion of control, structural uncertainty, probability and decision making under stress, cognitive bias. We're gonna talk about ego versus process, error management, consistency over intensity, trade versus identity. We're gonna talk about loss aversion, very important topic about the loss aversion. Stop, get moved, risk increase. How many times during our career in trading, in the first months of trading, in the second, third, fourth year of trading, can happen to everybody, guys. Move a little bit the stop, perfect. The risk increase, the probability of failure increase. So these little error that are not too little can compromise our entire month or maybe even the year based on the risk that we are. So we're gonna talk about emotional memory, temporal discipline, asymmetric risk. Okay, we're gonna cover many topics tonight, but start from the most important, our plan. I'm not talking about our trading and risk management plan that we are start to cover from the next masterclass. As I told you, from the fourth masterclass, we're gonna put a real focus on risk management and how to build the proper risk management in based on our strategy, because every strategy needs to fit properly into a risk management strategy. Okay, so activity creates opportunity. That's one of the most important things that we cover the last session as well. Our strategy, my strategy, is built on volatility. So thanks to volatility, I gain an edge on the market and I understand where I am going to position. So for me, activity creates opportunity. What I mean by activity, I mean activity in price. I mean fluctuations. I mean movement. I need the price to move before I take an entry in the market. If I see the market consolidating, I will not take a position in the market because I don't have an edge. I don't know where the market's gonna break next. Since my trading strategy doesn't work on broke support or resistance, on all that stuff based on fake show off, because for me a breakout means nothing if I don't have the proper volumetric data that confirm me what's real happening in the market. So for me, most important thing tonight, not the most important because we're gonna cover a lot of important things, but activity creates opportunity. What I mean by activity, volatility of course, and liquidity, because it gives direction, but just the volume validates the intents, the real intents on the market. Why I'm starting the masterclass tonight talking about activity, liquidity, volumes, and all these kind of things that maybe doesn't have nothing in common with psychology, because this is strategy, guys. Psychology, we fall into many errors and mistakes, failure, error, whatever you want to call, because we don't have a strategy, because we don't respect our strategy, because maybe we don't have a strategy. Okay, so being emotional in the market, it's allowed to people. I allow people to be emotional and have fear and have greed and have all this kind of emotion if they don't know what they are doing. Okay, when you're trading, guys, like a rock, solid, composite, no emotion, strict to the plan. Of course, during your path, of course, during your career, you're gonna pass through many phases of many emotion, new emotion that before entering in this market you didn't even know exist. Fear of losing money, fear of don't know what to do, fear of not know how to act in the market. But since you have a structured trading plan, you cannot have this kind of emotion anymore. You have to cut it off completely, okay? And being ready. So being ready, create in these minutes, in the next 5 minutes, cover a real plan based on my trading strategy. So activity, volatility, volume, validate the intents, context, avoid randomness. Okay, why I have fear to lose money? Because I'm taking random trades, because I'm taking random position, because I don't have any context, a real context of the market. So context, avoid random position. The scenario, I need to study the scenario and create a scenario. If I don't know, and this is really important things as well, exit complete the cycle, management protect the edge, okay, but I don't remember what I put. But if I don't have a price where I'm going to exit the market, since I open the position, so before to open the position, if I don't know where I want to close this position, where I want to be out of the market, when I will arrive at profit, I can trade, guys. Okay, so I have to have a scenario. I need to construct a scenario to define my execution. Okay, risk qualified trades, of course. We need to have a proper risk for any trade, and timing enable execution. Management protect the edge, of course. This we talk about the last one as well. So start from a little trading plan I created based on many things, and I can be very fast explaining this trading plan by just showing you these phrases that I wrote to you. If one step is missing, trading is not valid. My trading strategy is built on steps, is built on principles, is built on a really important point that I need to respect. If I'm not respecting many points, not just one, many, but even one, the trade is not valid. I have to be ready to lower my risk based on the condition, or be ready to lose money. Okay? Short-term trading is a decision process, not a prediction exercise. I cannot just enter and say, okay, for me the market today is gonna drop, it's gonna pump, it's gonna make this. No. Short-term trading is a decision process. I need to decide before entering a trade, not just predict where the market's gonna go, but decide every single step till the market arrive in my area, since I execute the trade, where the market's gonna drop, and still the price I'm willing to see the price. So every trade must earn the right to be executed. Since you open a trade, you are risking your own money, your well-earned money. Okay, money doesn't come from trade. So since you open a trade, this trade must earn the right, must earn a structure before to be open. You cannot just open trade based on emotions. That's what we are gonna cover tonight, emotions. Okay, if you open trade by emotion, be ready to lose money and be ready to fall into a mistakes after mistake and after mistake, and maybe be ready to quit very, very, very fast. I try in all my career to make people not quit in this market. One of the most I usually say one of the most important things. I say many important things, but I remember to write here: survival comes before profit. That's one of my goals to every people that followed me, every people that stay with me during the year, studying with me and everything. And I hope you guys into the ATS formation platform. We're gonna stay together for many years, and you're gonna learn from me what? Survive. Try to survive this market. Don't try just to make profit, survive. I told you the last time as well. So really important, survive. Okay? No activity means no opportunity. If the market is stopped, if the market is stuck, if the market is just been doing nothing, I don't want to trade this market. I need to be seeing something before entering a position. And I'm talking with you again. We are covering these topics. Maybe tonight the live gonna be a little more longer than the other nights, because I'm a little bit slower tonight. I did many things. I'm a little bit slower. Okay, but again, we are covering these topics before entering the main topic of the night, that is psychology. Because with no strategy, with no trading plan, with no principles, you guys gonna fuck yourself for real. Like, you're gonna really passing through tough moment in this market. And maybe, as I was told you before, quit early. Okay? Quit early before the real results gonna arrive in your life. So don't quit the market. Don't make mistake that gonna really lead you to a quitting process, like, I'm gonna quit this market, I've wrong too many times. Okay, don't choose to be wrong, choose to be right. How to be right? Follow a freaking good trading plan. That's how you're gonna survive this market. Follow trading plans. Okay, execution without context is randomness again. If I don't know where I'm wrong, I don't enter. Okay, that's how you do. You build a scenario where you're wrong. You build a scenario where when you look at the worst case scenario that can happen, okay? And again, you react, we don't anticipate. I try to anticipate the market in the analysis, but I have to react at the price when the session open, and then take an execution, a real execution, okay? Trade and by rule, not by emotion. So in the next 10 minutes, we're gonna cover all trading plan. We're gonna be very fast and focus on tonight trading psychology, cognitive bias, ego versus process, mathematical expectancy, loss aversion, okay, probability versus certainty, structural uncertainty, and many other things. But starting from the trade plan that I need to look at before opening every single trade, it's not a risk management trading plan. That's we're gonna cover on another session. It's just a normal trading principles. before entering in a trade to try to avoid many mistakes. Market activity. We're gonna have to look at market expansion, volatility presence. Volatility is present, that's a question that we need to ask ourselves. The session is active, the session open, London session, New York session, Asian session opens, it's already open. If the session is already open, maybe this is gonna put me in trouble because I don't have a reference of where there is the top of the market in each session. Each session, 90% of the time, create a bottom or a top, and by the start of the session, when I have this kind of information, I can trade way more easily because I have the reference of where's the bottom and where's the top. So market activity, one really important first step on our trading plan. Movement speed, session is active, volatility is present. How is the range expansion? What I'm going to expect? I'm going to expect a continuation of an expansion, or I'm going to expect a change of structure, okay? And talking about structure, we need to focus on the liquidity structure, external liquidity, internal liquidity, highs and lows. But I will know real where are the highs, where are the lows, just waiting at the market opening. Inefficiency can help us really to understand our target level. We can use a lot the inefficiency to target the market where we are going to close our position and exit the market. But how you read inefficiencies? Through volumes, guys. Without volumes, you cannot properly read inefficiency. Okay, so we have to connect everything, all these points, to volume interactions. So the liquidity structure, I can understand really the liquidity structure by connecting to volume interaction. Talking about volume, I prepare something very interesting in the cycle of evidence. This is very important. I'm going to go very fast. Volume interaction, okay? So volume interaction, aggressive order, delta response, absorption, initial flow, everything is connected between each other, okay? So we need to be ready to focus on the execution scenario based on the breakouts, reversal, continuation, failure. These we're gonna connect it to the invalidation point. So we need to be ready to have the execution scenario where we understand how I'm going to open the ATS terminal to have the markets here in front of us, so we can take a look on the market and explain, since we the market is dropping harder, dropping by 1,000 points. I was expecting a short tonight. This afternoon at this time, not 7 o'clock Italy time, it's Central European time. Okay, I'm gonna jump a little bit because I think this is a little boring. I want to cover all this, but during the live, I think we are already 30 minutes late. We start with a little bit of problems. So all the part of the trading plan we're gonna cover, of course, risk framing, execution timing, trigger confirmation, anticipation chasing, attempts to the market, double execution, because I allow myself to have a double execution in the market where I'm not too sure about what's happening. But I'm gonna finish, and I will be finished with the trading plan in a few minutes. Starting with the trading psychology, guys, everybody connected for the topic of the night, but I, of course, have in mind to show you a little bit of principles before coming into the main point of the live. So, start with the illusion of control. One interesting thing that we need to understand is the trader believe they can control the outcome. So trader believe they can control everything, but they cannot control, they can control just their position. The market is gonna move for himself. The market is not gonna listen to our prayers, okay? The market is gonna move in any way, okay? And interesting thing, more tool doesn't mean more control. These are not tools, guys. These, in the little trading plan that I'm going to explain you till the end of the live, are not tools. I'm not showing you VWAP, Fibonacci, or any kind of tools in any other. Sorry, I received a few calls. I'm not showing you tools, okay? Because more tools doesn't make you profitable. More tools doesn't make you, will not give you an edge, okay? More tool doesn't mean more control. The market doesn't care about our analysis, and that's true, okay? The market care about volumes, the market about market participant. The market care about proper timing sessions, okay? The market doesn't care about our analysis. Control only exists in risk, not in price. We can control our position based on risk, not in price. And I need to focus on controlling what's in my hand, not what in the hand of the market. Okay? So when control is an illusion, the next reality is uncertainty. Okay? So we are not allowed to be dragged by, because it's a drag. The illusion of control is like a little drag. Okay? I think I can control the market. I'm dragged completely. I cannot control the market. Just execute based on not what you see, because I brought it here. I wrote it somewhere. We see what we want to see. And that, unfortunately, that's the truth. We see what we want to see when we are under this kind of drag of control. I can control everything. No, you cannot control everything. But based on really important cognitive biases, that is like the brain is not designed for market. Yeah, that's for sure. The brain is designed for survival, guys. Our brain is not designed for success. Our brain is not designed to making money. Our brain is not designed to stay alive in financial market. Our brain, as a primitive essence, is designed to survive. To kill people if there's the necessity of kill people because we don't have nothing to eat during the cold days, okay? I'm traveling in the past, but I'm saying truth, like our brain is not designed for market, okay? So we need to enter in a state where we allow ourselves to be wrong, because we have to allow ourselves to be wrong sometimes, okay? We are not, there's no chance we are right 100% of the time, not even 50% of the time. I wrote it somewhere. Win rate is not where I wrote. I don't remember. I wrote many things. I hope we can cover everything tonight. I hope, because there's really a lot of things. But I wrote somewhere about win rate. We can have even 60% win rate, 70% win rate, 80% win rate. But we need to transfer win rate into execution win rate, because I can have a really great statistics on analysis, but really bad statistics on execution. Okay, that's why I always say to people, don't trade in the start of your career with demo account. And it's not about prop trading account, because prop trading, behind a prop trading account, there's a payment. Of course, you are paying for having an account in your hand. So you know you are risking money, even if you are not risking real money for trading, but you are risking the possibility to fail the challenge that you are going to have. So demo accounts, talking about demo versus real accounts, taking out, of course, all the part of the psychology, okay? Because if you are not trading with your own money, but you are using broker demo platforms, I'm not talking about prop firm, of course. I hope you guys understand what I'm saying about prop firms and demo account. But demo, normal demo account, they take it out all the part of the psychology. So you're never gonna learn for real how to move in this market until you risk money. Can be a real account, can be a prop firm trading account, can be a copy trading, can be whatever. But not demo account numbers, fake numbers right there. No. Okay? Trading with demo accounts, you are gonna skip everything. Emotional memory, temporal discipline, probability, structural uncertainty, a lot of things you're going to lose. So, illusion of control. Traders believe they can control everything. Perfect. When control is an illusion, the next reality is uncertainty. I want to be right in the market. No, I don't want to be just right. Okay, I want to survive. I want to build my own path in the market, not being dragged by control and by fake discipline. Okay, so cover structure and uncertainty. Markets are uncertain by design. Okay, I don't know what's going to happen right there. I don't know if the market's gonna pump or the market's gonna drop. I can not just create a provision, create an outcome, but I can move by creating this outcome. Okay, uncertainty is a flow, it's the system. Price is the result of invisible decision. I think we talked about this specific point in the last session. Okay, invisible decisions are what we cannot see, but invisible decisions are made by really big players, and we just see the outcome later when they want to show us what they have decided. Okay, there is complete information, and that's unfortunately the truth. Okay, through the years you're gonna comprehend there's no strategy that have 100% win rate, and as I told you before, I don't give a fuck for 100% win rate. I really don't mind for 100% win rate. I mind for 30 to 40% execution win rate on the same risk management. If I have a 30 to 40% win rate on the same risk management, there's no way I'm going to blow my account. And there's no way, guys, you're gonna lose a prop firm and fail completely all the valuation reaching 10% drawdown. There's no way. Just if you have a 2 months drawdown completely, taking loss after loss and after loss. Okay, because one trade having 30 to 40% win rate can save you a month of errors. Okay, so price is the result of invisible decisions. Don't get mad when you don't understand what's happening. If you don't use volumes, guys, unfortunately, the market is gonna show you many things and you will not understand nothing about what's happening till you open a proper volume platform and understand what's going on there. Okay? Decision must be probabilistic, not predictive. Your strategy must be built on probability and not predictions. Okay? And as I wrote it there, probability is not certainty. Probability is a statistics. Probability is based on previous results, previous price actions, previous react of the market in certain areas. Okay, so probability is not certainty. A correct decision can still make lose money. Good trade can lose. I can make a perfect trade, but then the market kick out me for spread or kick out me for... I was actually inside this trade, guys. I showed you. I was inside this trade and the market kicked me off at the... I entered 96, 60, 76. 96, 76, almost here I enter. My stop loss were here and the market kicked me out completely. I lost 1.7. So, you know, it's a good trade. Yeah, it's a good trade because probably I will be 1 to 5 in a risk reward way. And I'm here making no money. The market kicked me out, but you know what? That's part of the risk management. I had a stop loss very short stop. The market kicked me out for a few points and then goodbye. The market is dropping. Probably the market goes the most important level of the session, 95 400, 95 94 500. I don't know, probably the market's gonna drop a lot. What I do? I cry. What I do, guys? Nothing. Just follow my plan. Tomorrow's gonna be another day, a perfect day. Okay. Today I was waiting and waiting and waiting for the perfect setup. The perfect setup just came at a really bad moment before I was entering the live. Entered the market take me out, and the market fell completely. I was probably doing something around 10k to 15k probably, but here I am, okay, here in live with you, explaining many important things. Okay, so again, bad trades can win. Outcome does not define quality. Emotion take over when this is forgotten. Okay, a bad trade can win. Yes, a bad trade can win, guys. A bad trade can win. A bad trade. What is a bad trade for me? I don't want to speed up a lot. We are gonna take our time tonight. I don't have no pressure. If you have pressure, this is not the live for you, because we are covering many topics with our time. No pressure. So what is a bad trade for me? A bad trade for me, for example, the market is dropping fast. What is a bad trade for me? Example is entering very late on a trade that I already planned to enter in a perfect area. So for me, a bad trade is like this. I don't change my stop loss anymore. I did this mistake when I was very young in the markets, when I had no experience. I don't do this kind of shit anymore, guys. So please don't be like everybody in the start of their career, changing stop loss and changing entries and changing everything. And I've wrote it here. I wrote this here, 100%. I remember. Accept mistake instead of fighting them. Okay, we're gonna start talking about cognitive bias and the ego versus process. So the brain is not designed for market, as I told you before. We see what we want to see. Okay, and ego. The ego is something that we can reconduct to the control, because ego somehow is thinking you are the best, thinking nobody can beat you, thinking the market can beat you, thinking you are unbeatable. Nah, you are completely unbeatable. You are replaceable. The market doesn't need our liquidity. We are so little, guys, unless you are billionaire. But we are, even if you are millionaire, even if you have few millions in your bank account, you are still a fish, a little fish. The market doesn't need our liquidity, guys. Okay, so really interesting things about the ego versus the process. Okay, the ego want to prove something, process want repetition, and the rules remove the emotion. As I told you before when I started live talking about the trading plan, invalidation point, risk framings, execution time, how we manage the trade, how before entering a trade I managed to exit this trade, how before entering a trade I need to have a really good invalidation point, scenario failure, time invalidation, volume invalidation, structural invalidation. What is for me this kind of invalidations? Based on this invalidation, I should not have traded at 7 o'clock in the night, but I had the perfect trade, and the trade was really perfect. As you see, the market is dropping fast. Okay, the market's gonna happen. For me, 94,000. I'm not giving you any financial advisor, because if you open some short position, I think something is wrong with your strategy and something wrong in try even to open a position there with just loss where. Okay, so focus on our lessons again. Focus on ego versus process. Ego seeks validation, process seeks consistency. Okay, my ego tell me open this position because I think you are right. My process, my career, my experience, I will say process that I talk here is experience, is real passing through tough moment during the years. You cannot even thinking, guys, after 1 year of market to be profitable, to be ready to manage really big funds. You cannot, guys. In 1 year you learn nothing. In 1 year, even in 2 to 3 years, you learn nothing. This is not a market for principiants. Okay, It's a market for experienced trader. So allow you, accept that you need to pass through 1, 2 to 3 years of career before really consider yourself ready in this market. No emotions. In the first 2 to 3 years, you will have a lot of emotions, a lot of ego, a lot of not self-control, because self-control you're gonna gain after many years in this market. Okay, this how can I say in English? I don't know, but like this thought of being right all the time, to expect that the market gonna answer everything you are asking for. No, the market, more you ask the market to do, the more the market gonna take out of your money. Okay, so rules remove emotions. Trading plan removes emotion. Trading plan removes ego. And accept mistake instead of fighting them. Because a mistake made once, it's a mistake. A mistake made 2, 3, 4, 5 times, it's a decision. Okay? You have to accept that you make a mistake once, but then change this mistake and don't do this mistake anymore, because unless you want to repeat this mistake and make this mistake a decision. Okay? So error management. Started talking about mistakes, errors, failures. Okay? Losses are not failures, they are data. What I learned from a little loss that I take tonight, I learned that probably my loss should be 10 points higher. I have 7 years of experience in this market, guys. For me, really good results obtained. For other people, probably my results are too little. And that's how trading should be. Everybody stay in their own lane. I don't want to compete with nobody. I don't want to compete with you. I don't want to compete with many other colleagues in this crypto space. I don't want to compete with nobody. I want to compete with myself. My and only self is the only adversary that I have in this market. I need to be in continuous competition with me and my results. Okay, but again, losses are not failures. They are data that they're gonna sum together and create our statistics. So I can take many losses I want, but I don't have to think about losses as a failure. Failure, you know what it is? Failure is don't respect your trading plan. Failure is losing more money than you can afford to lose. Failure is something that you're going to predict you're going to fail. You know, everybody wants on life. Failure is entering a position here, and in all this stage, when the market is against you, continues to create and build position because you think you are right, the market's gonna drop sometimes. This is failure for me. Really big failure. Going against your trading strategy. Okay? There are execution errors and statistical losses. Okay? Tonight, 2 hours ago, I did a not pretty bad statistical error, but I just adjust my loss as we're moving, and I did my loss really tight. The market take my loss and then collapse. So what I learned from this execution error? That is a statistical losses. It's part of the statistics. Okay? Not all losses are mistakes. I made a mistake tonight. No, I cannot consider this a mistake, but I'm going to learn something. And this loss go to a specific place that is called career. Every loss go into your career. Every loss go into your statistics. No loss is bad. From every loss you're gonna learn. You're gonna learn just with losses, guys. You're not gonna learn with profits. Profits will make you feel amazing. Profit will make you feel greedy. Now we are covering the greedy part. Okay. Asymmetric risk. What is asymmetrics? What this specific word means? What is asymmetric? Asymmetrics is something that is not perfect, something that is not symmetrical. Okay, so survival come before profit. Risk define the opportunity that I'm going to take in the market. Lose small, win when you are allowed to win. Okay, without asymmetry, the expectancy collapse. Risk must be controlled over time. Focus in the next masterclass about risk and how risk management is constructed in my strategy. Okay. Temporal discipline. Time is a psychological variable. Overtraining is emotional impatience. Not trading is an active decision. As I told you many times, don't take a position in the market. It's a decision. Somebody thinks I'm gonna stay out of the market, and I don't know if I'm doing right or wrong the market. Let me check what Bitcoin is doing. Shame to not be in, because I think really the next days will be interesting. Okay, talking again of temporal discipline, about overtrading. Overtrading is impatience. End of the conversation. Overtrading is impatience. Overtrading is not having the patience of being, how can I say, being completely stopped, like doing nothing. You need to learn on how to do nothing. When you learn how to do nothing, you're gonna really save money from the market. Okay? Remember, each time you enter a session, you are putting yourself in the position of losing a lot of fucking ton of money, guys. Lot of money. It's the only job. When you start working, you may be ready to lose your net worth. Invest in your account. Because I did many times in the past, 2018, 2017, 2019 was at the start of my process. I blown hundreds of accounts. I remember the emails of brokers coming in and say, you blown our account, many risks. Guys, who does not did this in the past? Everybody passing through these phases. Why? Because you don't respect your trading plan. You are a failed person when you don't respect your trading plan. End of the conversation. You have to put yourself in shame when you don't respect your trading plan and when you did this kind of mistake repeatedly. Okay? So temporal discipline. Overtrading is emotional impatience. Overtrading is trying to make more money than you. Overtrading is I need to be in. It's just like FOMO, you know? Impatience. What is the perfect strategy? Be bored. Be bored, guys. Bored trades are the best. And not just bored, but like monotony. You know what I mean by monotony? Like ordinary things. Like every day, the same exact thing. At the same exact time. With the same exact conditions. That's this kind of consistency and emotional memory, not just emotional, but memory, as I was talking before. You need to create a specific time where you're going to work, like sessions. For me, an example can be New York. You need to create a trading plan that needs to be respected in every point, starting from point A, going to point, I don't know how many points your trading plan should have. You don't need to follow my rules. You need to create your own rules. You're gonna have success if you don't copy other people, but you create your own trading strategy and your own path, guys. Copying people will lead you to many errors that you cannot solve because you don't know how other people solve their problem. So you need to create your own strategy, do your own mistake, and by yourself solve your own mistake. Okay? Boredom create good trades. Boredom create good, not just trade, but good traders. By being bored, you create a process where you do the exact same thing, the exact same execution, where you cannot fail if you follow the same things every single time. Good results are being they are created by follow the exact specific same things. Time pressure strengthens the emotional memory. Okay, so covering the part of the emotional memory, this is all the last masterclass. A lot of mental maps, a lot of content, a lot of things. If you didn't watch the last masterclass, go into the Discord of ATS and you will see the recordings. Okay. Emotional memory, the brain remember pain more than statistics. You're gonna remember the bad trades more than the average trade that creates wealth. You're gonna remember very easily the day that you blow your account, or the day that you take a big loss, or the day that you make this kind of mistake, over the days that you went through a really good trading decisions. Okay, as I wrote here, lose small, win when allowed. Little win every single day is just the best thing that you can do. Okay, put yourself a target of profit, of course, and respect this profit target. Once you exceed this profit target, you are more exposed to danger than of when you were losing money. Because the most fear the most rational fear that I feel in the market is pending profits. Pending profits are a real struggle for me, and I think so for you. We're gonna cover in the next masterclass. But if you are up 10k on the day and your target is 3k, 4k, you are exposed to lose all the profits, because all the greed that you are having by having a lot of profits gonna put you in trouble by probably double the sizing, double exposure, and maybe closing the profit but risk the profits of the day. So all this conditional bias we're gonna cover tonight, of course, but especially in the next masterclass, talking about risk management. Okay, fear comes from remember pain, and that's where we should learn from remember pain to not feel pain anymore and not trying to feel fear again. Okay, confidence rises at the most dangerous moments. I think so. Everybody have been through many losses. If you are not been into many losses, from the bottom of my heart, I hope you pass through this moment. I'm not hoping you to lose money, but I'm saying in a certain way that losing money gonna help you a lot. Okay, since you lose money, you're gonna really understand what the market are capable of. If you don't lose money, if you are not ready to lose money, and if you will never lose money, I don't know, there's something wrong, because everybody lose money sometimes in this market. The market is a zero-sum game. If I'm making money, it's because somebody's paying me. Probably your money is paying me. Okay, because the market again is a zero-sum games. Some liquidity enters in, some liquidity exit. Somebody take my liquidity. Sometimes I take liquidity of other person. It's a big pool of money where if you're good, you take the liquidity of other persons. I know it sounds immoral. It sounds really bad for who is Christians or for who follow any kind of religions, because speculation is something that it's almost forbidden in religions. But that's how it is, guys. It's a capitalist world. We need to enjoy that we are able to participate, but we need to be smart. Otherwise, the market, I'm sorry, but I'm gonna take everything you had. Cyclical overconfidence. Confidence rises at the most dangerous moment, as I told you before. You know, when you feel in danger and the confidence, as I told you before, the illusion of control take over, and then where the mistakes are done. Okay, we need to replace confidence with disciplines. Okay, discipline and being critics on our trading strategy and being really motivated by follow our trading strategy is what has to be done. Okay, confidence is nothing. Confidence is shit, guys. I'm sorry to be rude, but like, if you feel confident, for what you feel confidence. Okay, you have to have disciplines and be ready to these days, like today, being part of the statistics of the Really good trade, but bad execution. That's happened. I'm not the best. I try to make my best in this market to survive. I want to stay in this market as much as I can. Okay? For staying in this market as much as I can, I need to cut it off all the failure parts that made me fail in the past. I know where my mistakes were created. I really know, I know mistake by mistake that I've been done in the past, I will not gonna get again. And that's the key. Know where you fail, learn from your fail, and doesn't repeat the fail. Okay? Loss aversion. Losses hurt more than gains. Okay? Gains feel good. Loss hurt. Stop, get, move, risk increase. I should have done this today, you know, put the higher losses and higher, double or triple my exposure in the market. But that's not how you do, guys. That's not how you do. Okay? Hope replace logic. That's the problem with the loss aversion biases. Okay, we're gonna come through a little end. I think in the next 20 minutes the masterclass will be ended. So thanks to all of you for the attention till now. We are going to speed up a little bit and again cover one important part of the trading plan that I showed for a few seconds, but I was going to focus more on the trading psychology stuffs tonight. So the loss aversion bias, trade turning to investments, thinking number, not emotion. This is not so important, but this hope replace logic, guys. How many times you entered in a trade and then the hope of the conviction that you are right and something replace the logic? Okay. They told me about I'm not sharing screen. Why I'm not sharing screen? Just a second. I'm not sharing screen right now. I am. I don't know, since I was not recording the screen. Okay, now yeah, perfect. Loss biases. Hope replace logic. Again, how many times you feel that hope can replace logic? It's really simple. Okay. Mathematical expectancy. Trade is a statistical business. Again, here I didn't remember before. Win rate is meaningless alone. Again, win rate of analysis and predictions and everything is mean nothing. Okay, you have to have statistics by hands. Risk of win ratio. From tomorrow, your strategy need to be on a proper program of tracking. You need to track your performance, like ATS on the portfolio section will track every trade you did, every day you did in this market, and all the results you had in your account. There are many good trading programs, of course, where you can connect all your trading accounts, and you need to have data to be sure that you're not just having win rate based on some conviction, you are having statistical execution win rate. Okay? And you have to have expectancy. Expectancy lives in large samples. One trade means nothing. Somebody get excited of being winning a trade, being winning a week, and being winning a month. Maybe come over a shitty here, complete hole here. So a trade mean nothing, a week mean nothing, a month of perfect win ratio, win rate means nothing, guys. Okay, one trade cannot define you. And something interesting, ending the live, trade versus identity and consistency over intensity. Again, coming back to an important point that I focused before, boring trading is effective trading. The more bored you feel in this market, the more you're gonna have in results. And the market is right in front of me. Okay? That's how it is, guys. No days is loss. Every day is an opportunity to get 1% better. Try to get 1% better. Okay, at the end of the year, not even 100% you grow 365%. Okay, if you do 1% a year, it doesn't even fit in the 100% statistics. You're gonna triple that. Okay, so 1% better every day. I take a loss every day, even if the analysis was perfect, the execution was almost perfect as well, but the loss was too tight. Okay, the market kicked me out, went to my direction. I left a lot of money on the table, not just on ATS, that is a funded account, but on my personal account and copy trading and all the stuff, and many funds I have under management. But that's life. Okay. Again, boring trading is effective trading, and edges compound through repetitions. The more you repeat something, the more bored it feels, but the more results you're gonna have in market. Okay, repetition beat the excitements. How many times I wake up in the morning and say, I have a nice setups. 7 a.m. in the morning, 9 a.m., 11 a.m., midday. This is excitement. Want to open a trade, operate in the market, and feel active in the market. This is just excitement. The repetition, what it is, and the repetition that beat the excitement, what it is. Know that my trading statistical edge on execution and analysis is built on New York sessions. What time is New York session? 3:30. Okay. Everything that comes before 3:30 is excitement. It's not edge. It's not statistical that I can be right in this time. So I don't trade. That's it. Okay. I am not my P&L, and that's it. When you feel you are doing a lot of money, remember, you are just at the start of the process. You can fail tomorrow and lose everything you have. So don't try to put you in a situation where you compare yourself to your P&L, even if it's low P&L or very high P&L for what you consider high. Loss is information, not judgment. Oh, I take a loss, I don't want to be rude, sorry. I'm a dead man, I take a loss. No. Loss is information. You have to extract information from a loss to don't commit again. And it's very important. From the next masterclass, we are going to cover finally my trading strategy, complete everything that you need for being, I don't want to say profitable, because being profitable doesn't depend on a strategy. Being profitable depends on you. And most people are not ready to be profitable. Most people will never be profitable because they never reach even with the thought, the thinking of being profitable. Many people doesn't really know what it is making money from markets, so they will never be profitable because they will never be ready to be making money from markets. Okay, but every loss is an information. Every profit, I will not say the same. Okay, identity attached money create fears. Clear identity enable clear decisions. You need to be sure of who you are in the market, what you're doing in the market, why you are in the market, and what are the results that you want to take out from the market. Okay? Repetition beat excitement. And I think this is really a phrase. Allow consistency instead of emotional spikes. Okay? Like people say, what is happiness for you? Happiness is moments. Happiness is spikes. Okay, life is what is built through many moments of fear, of anger, of happiness, of love. So trading, career, I say this through the bottom of my heart, consistency in trading allow you to have consistency and not just emotional spike of being right in the market, having some profit, having some loss and everything. Okay, emotional spikes are one of the worst things. Okay, being like on a high rollway cost of emotions. Consistency, everything is part of the plan. You're losing money, you're making money. It's part of the plan. Consistency. Tomorrow's gonna be another day. Okay? Ego versus process, cognitive bias, error management. I hope we cover this part lately. So not all losses are mistake. Professional traders manage errors. Amateurs avoid it. That's the truth. Okay, amateurs trader avoid to being wrong. Avoid to. I cannot make mistake. No, you can make mistake if the mistake is planned. Okay, it's amazing before starting a session know perfectly how much you're gonna lose, how much you are willing to lose for a session, what's your maximum trade allocation for a trade and for a session. So professional manage to make errors, statistical errors, execution errors. Amateurs traders avoid completely, and by avoiding making errors, then the market is gonna return you everything, because the market always returns everything. Okay, so this part of the trading plan I've covered very fast. Starting again from the bottom, exit condition. I have to know volume exhaustion, opposite aggression, time stop, liquid reach. I need to know before entering a trade everything. How I will manage the trade, how I will execute the timing of the trade, in which specific time the trade is gonna react to my areas, risk framing, distance efficiency, size adjustment, max locks, invalidation points. Okay, all this part of the trading plan that I create this mental map 1 hour before the live, because I really want you to allow that psychology is not just few biases invented. I'm not inventing this. This is all true. Asymmetric risk, emotional moment, emotional memory, structural uncertainty, bad trades can win, everything over in the past hour. My intention was showing you that we can avoid everything we cover by create rules, by create a managed plan, by create a risk plan, by create a scenario plan, and know how to act. Again, short-term trading is a sequence of filter. We need to create a baskets of filter and use every kind of filter to remove all the bad mistakes that we can do. We still gonna do a lot of mistakes, because it's human making mistake. There's nothing wrong of making mistakes few times, okay? But again, this market gonna take everything you have if you choose to continue do mistakes after being wrong. Thanks for everybody being inside this masterclass. This masterclass was complete. I think we covered many topics. We had a little issue at the start of the live. I hope nobody get bothered. And if you get bothered, this is live, guys. We are live. Mistakes happen. Again, we were talking about mistakes. Accept mistakes. Okay. So I hope everybody enjoyed this masterclass. We are gonna see each other the 20th of January, then the 25th, and then the 30th of January for another 4 masterclass, 3 masterclass that we have for this month, just for January. I hope you learned something new tonight. And even if you doesn't learn something new, even if you didn't learn something new, guys, remember, you're gonna have results through repetitions. The more you're gonna repeat something, the more you're gonna have results. So if you have your ego up and think you know everything, if you don't have the results you want, that's why. It's because you think you know everything. So try to put yourself in the position of waking up in the morning and remember I don't know shit. I know nothing. I'm new to this market. I need to learn everything again. This is the position that I put myself every morning when I wake up. Okay, what I'm going to learn from complete people that I don't know, people that I doesn't even the name. Okay, so you have to learn from everything, learn from mistake, learn from loss, learn from every session that you do in these markets. I hope everybody enjoy the masterclass of tonight, of everybody enjoy and taking some learnings. I wish everybody a wonderful evening, wonderful afternoon, wherever you are in the part of the world, and wish everybody who will listen us in the future. And every question that you have for the future, prepare, because at the start of the new masterclass on the 20th of January, I will start the masterclass without recording, just to cover your question, because I think tonight we are running a little bit late to start taking your question and answering. Okay, so again, hope everybody having a wonderful evening. Thanks again for participating, and yeah, perfect, we close the live. Thanks guys, have a good evening, good trading to everybody. Hope everybody had a wonderful week and a good weekend to everybody from tomorrow till Monday. Okay, then we are again on the 20th together. Bye guys, see you and have a wonderful night. Thank you so much for participating.